This year has been unlike anything we've ever seen in listed option markets. We're hitting volume records, seeing massive swings in major indexes, experiencing heightened volatility, and serving a growing range of participants, from retail traders to systematic quant strategies to multi-billion-dollar asset managers, all using derivatives to adjust exposure and achieve investment goals at massive scale. Let's dig into the numbers. Volume first. As of mid-April, average daily volume is 59.7 million contracts. That's up 21% from 2024, which was already a record year. At this pace, we're on track for over 15 billion contracts in 2025, which will be the sixth straight annual record. The growth is spread out across single stock, ETF, and index options, all seeing double-digit percentage growth. For comparison, 6 years ago, daily volume was under 20 million, with annual totals below 5 billion contracts. This year alone, we've already hit 6 new single-day volume records, including 101 million contracts on April 4th following the tariff announcements. 26 million of those contracts traded in the first hour, which is another record. On that same day, SPX options traded 6 million contracts, up 54% from the average and well past the previous record of 4.8 million contracts. VIX options are also setting records, averaging 1 million contracts a day this year. In a recent macro volatility digest, my colleagues Mandy Zhu and Ed Tom noted that implied vol is responding more sharply to market moves than it has for the past few years, which is drawing in portfolio hedgers and volatility traders alike. Let's talk dollars. This year, we're seeing $35 billion in daily premium exchanged, up from $26 billion last year. That growth is thanks to both the higher volume and the richer premiums you get when you see a higher VIX. Total notional value is now $3.6 trillion per day. That's larger than the annual GDP of France. Before COVID, that figure was under $900 billion. The infrastructure to support this activity is just as impressive. Opera, the centralized market data processor for the industry, is currently processing about 300 billion messages daily across 82 expirations and 1.6 million listed contracts. Individual executions now exceed 10 million per day, and our COO, Chris Isaacson, recently pointed out that our firm handled 1 trillion messages across all our markets in a single day. An incredible technical achievement that keeps markets stable even under stress. Another major shift for our markets involves 0DTE and short-dated options. Before 2020, contracts expiring within a week made up about 1/3 of the total option volume. Now they make up nearly 2/3, and in leading ETF and index names, 0DTE contracts, those options trading on their expiration date, are more than half of the flow. These contracts, which were pioneered in SPX, allow precise intraday adjustments to exposure, and they're used by a wide range of participants executing tactical, quantitative, and premium-related strategies. We've also seen a shift in the volatility regime. From mid-2023 through most of 2024, VIX stayed around 15, and the put-call skew suggested a bit of complacency as markets just trended higher. But conditions changed rapidly following the all-time highs we touched earlier this year, and in March, VIX spiked to 30, and in April, surged to nearly 60, driven by the sharp sell-off. With uncertainty still high, we expect to see continued volatility and opportunity in the months ahead. In terms of participation, we continue to see strong growth in the retail segment, with data showing nearly half the market volume today comes from the largest retail brokerage firms. This has been a major theme over the past 5 years and shows how individuals are taking advantage of optionality in accounts of any size. Innovation is what drives all this growth. We've seen the rise of a new category of ETFs that use options to deliver yield, protection, or outcome-based strategies. Morningstar reports that assets in these products have grown from $30 billion to nearly $200 billion since 2020. With a wide range of outcomes and risk levels, these products bring the power of options to investors who might not otherwise be able to use them. At Cboe, we've expanded our product line with crypto-related tools like the MBTX Bitcoin Index, better access to complex orders through the quoted spread book, and new listings like SPX equal weight options and VIX options on futures. Each of these helps deliver the unique benefits of derivatives like convexity and precision to modern portfolios. As the industry enters its 52nd year, it's exciting to witness this momentum and transformation. The data doesn't just show growth, it shows evolution. And based on my conversations with traders and industry leaders, we're just getting started.